just think of the month that we just came off of, the month of April. If you were someone, as you know, the three of us are, who was watching the markets every single day, every single moment, every single second, checking futures first thing in the morning and first, before bedtime, going to sleep, you'd pull your hair out. You would drive yourself insane. And for many of our clients who are frankly longer term investors, they're not day traders. If you would have went to bed at the beginning of April and woke up at the end, you would have missed out on a whole lot of indigestion, and you could have relaxed and not driven yourself crazy. And I think it's important to put the volatility in context. Look, at the end of the day, yes, we are witnessing a sea change, and we are going to see changes to trade policy that could affect the economy and very well probably will affect the economy. But if you put volatility into context and you think about the stock market and how much volatility you typically witness as an investor, I mean, since 1998, just to put some numbers in front of you, we've seen 19 years with intra-year drawdowns greater than 10%. And yet in 21 of those 27 years, we finished the year higher. Stocks finished the year higher. And if you put that in percentage terms, because maybe that's easier to visualize it, that's 70% of years we saw intra-year drawdowns of greater than 10%. And in 80% of years, the stock market finished the year higher. So this is part of investing. I think Warren Buffett said it very, very well last weekend before announcing his retirement. He said, if you're someone who watching a 15% correction in the stock market makes you freak out, maybe you need to, reassess your investment philosophy, because that's just part of being an investor, frankly.
And many of your clients are CEOs who do have operations in China. What are they telling you? How are they being impacted right now?
Their businesses are certainly being very impacted. We were actually in New York last week visiting a few clients. I wanted to come in to see you guys at Bloomberg, but we just had back-to-back meetings, and I couldn't, unfortunately, make it in. But it's been really difficult. I spoke with one client last weekend who's a CEO, and they're in the clothing business, and they import a lot of goods, as you can imagine, from China. And she said she just came off of the most difficult few weeks of her life. And the company, frankly, is facing paralysis. We have 145% tariffs with China right now, and companies can't operate in that environment. So it's over the next few weeks, and I'm sure that you guys have had many conversations where people have told you this. It's over the next few weeks where we're really going to start to see the effects of that. And we're going to start to see emptier shelves. We're going to start to see the effects of fewer, ships coming into U.S. ports, bringing in goods, because no one really wants to operate under a 145% tariff regime. When the expectation, we have negotiations in Switzerland this weekend, is that that's not going to be the end goal. We are going to see progress move at least in the right direction. No one knows what that number is going to be at the end of the day. But for CEOs and companies trying to operate right now, it's really become impossible, because they're just waiting for some type of deal to be struck, or at least there to be movement to a lower tariff regime, because just no one can operate right now.